Back in July this year, Boss Quantum kicked off its IPO preparation. Just 1 month later, Turing Quantum also completed its IPO filing. These two companies were founded in 2020 and 2021 respectively, both focusing on the photonic quantum computing part, and both using Guotai Haitong as their sponsoring broker, with similar tech roots, close founding dates, and nearly simultaneous runs at going public. They're both vying for the title of the first photonic quantum computing stock. Now, even though they're both in the broad photonic quantum space, their specific approaches are actually quite different. Boss is currently focused on coherent optical, dedicated quantum computing, basically working with what we have today to solve specific optimization problems. Turing, on the other hand, is building from photonic chips all the way out to software and force systems, betting more on the future with full-stack capabilities and a photonic chip platform. Boss's founder Ma Yin has claimed their dedicated quantum computers have already generated hundreds of millions in revenue. Turing has disclosed that its 2025 order volume broke through 100 million yuan. But here's the thing, so far, both companies have really only cleared certain technical and engineering milestones. Their actual businesses haven't entered the stage of scaled, production-grade commercialization. So what does it mean to go public at this point? What gives them the confidence to attract market interest? One key catalyst for this cluster of IPOs is the policy window opening wider. Last year, the STAR Market's 1za6 reform reopened the fifth listing standard to and profitable companies and expanded its scope to support more frontier tech enterprises. On June 17th this year, the Shanghai Stock Exchange went further, soliciting public comments on revising the STAR Market's key industry support scope with plans to directly add quantum under the new generation information technology category. Of course, companies don't necessarily need to wait until their business is fully mature before going public. But pricing, you can skip commercial validation. It's not just about selling a single quantum computer. You need to show that products can be delivered, rely, ally, and repeated, lie, that customers are using them and coming back. That revenue can scale in that the technology can create verifiable value in real production environments. Let's talk about Boss first. Their tech choice is different from the mainstream gate model, universal quantum computers, which can arbitrarily combine quantum gates to run different quantum circuits. Both instead starts by identifying problems we can solve today, mapping combinatorial optimization problems onto Ising or QUBO models, then using their dedicated, coherent optical quantum computers to tackle real-world challenges like traffic scheduling, financial investment, and drug development. This year, Boss released the Yuliang Shanghai 1000, which supports 1000 bits using problems in standard mode and up to 3000 bits in overclocked mode, with at least 16 hours of daily availability. They will also broaden a scale manufacturing plant for dedicated quantum computers in Shenzhen. Public records show Boss has already delivered real machines to customers, including the National Super Computing Chengdu Center, China Mobile, eCity, and North China University of Technology. According to earlier disclosures by Ma Yin, cumulative system orders have exceeded 10 units, with North China University of Technology's publicly listed unit price reaching 5.785 million yuan. Their cloud platform covers over 900 universities and more than 10,000 developers. Now for Turing, their ambition is bigger in scope. They want to build a foundational platform for the entire ecosystem. While selling Turing Q Gen 1 and Gen 2 photonic quantum systems, they're simultaneously developing photonic chips, manufacturing processes, software, and QPU plus GPU, heterogeneous computing. Their co-platform extending into the broader photonic market, including AI, optical, connectivity, and communications. Like both, Turing has disclosed multiple industry partnerships. China Mobile State, Greater Shaanxi Data Group, and others appear on their collaboration or application lists. In 2026, they completed software-hardware compatibility with domestic GPUs from Hygan and Wolfreds. On the public procurement side, Turing was won the Hunan Normal University Photonic Quantum Computing System project at 2.846 million yuan. That involvement in building the Wuxi photonic chip pilot production line represents a step toward moving photonic chips from repeated lab prototyping to repeatable manufacturing, rapid iteration, and potentially mass production. But clearing technical milestones and having paying customers does not take well. Reaching a commercial inflection point Based on currently available information, both Turing and other quantum companies are trying to prove commercial value through technical value. In the short term, capital markets have given very positive feedback. But what really matters is how far this road goes, when industrialization, validation will be completed, and whether the current challenges can be solved as expected. This validation cycle is clearly lagging behind the capitalization process. Speaking of which, quantum CTIC offers are useful. Reference case. When it went public 6 years ago, it was more mature and steady than both and Turing are. Today already a profitable company with over 200 million in revenue, primarily in quantum communication. But after LISTING, its revenue and profitability didn't keep climbing. In fact, developments played out exactly as its own prospect as had warned. The prospectus noted that quantum communication was still in the promotion phase, with business mainly dependent on national and local quantum secure communication network construction. The pace of local government network rollout was uncertain, and expansion to government, finance power, and individual users would take time. The prospectus even explicitly stated that if procurement demand dropped significantly, operating results could decline substantially. And sure enough, in 2020, the listing year, Quantum MCTech's revenue fell from 258 million in 2019 to 134 million. It took until 2025 for revenue to climb back to 310 million, surpassing pre-listing levels, with a net profit of 539 million. But after excluding non-recurring items, it was still losing 43.55 million. Customer concentration and project dependency were another issue. The prospectus disclosed that from 2017 to 2019, the top 5 customers accounted for 73.59%, 80.75%, and 72.87% of revenue, respectively. Digital China was the largest customer for 3 consecutive years. It hung 21.14%, 57.90%, and 59.52% of revenue. Main LY, corresponding to large-scale projects like quantum secure communication, backbone networks. As recently as 2025, the top 5 customer share remained high, at about 63.5%. The more fundamental issue is the risk of large-scale product industrialization. One of Quantum MCTech's original growth narratives was that after building backbone and metropolitan networks, quantum communication would spread into finance, power, government, and broader commercial markets, meaning more senior IOs and greater growth. But now, according to its semi-annual report, in the first half of 2026, quantum computing revenue reached 66.22 million, up 18.34% year-on-year, surpassing quantum communication at 49.51 million. Years later, the boomerang came right back, going public. Did it make the industrialization risks just disappear? A company that went public primarily as a quantum communication business now finds quantum computing has become its new growth engine. Regardless, both Turing and other quantum companies have stepped out of the lab and into engineering and industrial application validation, with the 15th five-year plan incorporating quantum technology as a new economic growth point. Both primary market financing and IPO preparation are accelerating simultaneously. The secondary market has also shown strong enthusiasm for quantum industry, Qing IPOs. For instance, Pinzhuang Laser, which recently listed on the STAR market, saw its stock price surge over 500% from the IZ offering price on its first day of trading. Capital markets are showing plenty of confidence in the future of quantum technology. But the questions remain: where does the raised money actually go? Are the funded projects hitting their targets? What's the real capacity utilization at the factories? Is revenue growth keeping up with financing and valuations? And how much more capital will these companies need after going public? These questions will become the sword of Damocles hanging over both and Turing after listing. Whether it ultimately falls will be answered by their operational performance over the coming years. For more in-depth insights on robotics and hard tech, be sure to follow the Fourth Wave on WeChat and our video channels. See you next episode. Just a quick reminder, the content and opinions in this episode are for reference only and do not constitute investment advice. Investing carries risks, so please proceed with caution.